Alright guys, welcome to another arcane slash education video. And today we're going to be breaking down standard deviation projection. This can be very important because I utilize standard deviation projection to essentially project how far a reversal or typically a continuation will move in your favor. Now, when you are trading a continuation move, it is very important to remember that it will typically not move as much as a real strong reversal will. On the other hand, the probability of the trade continuation is typically higher unless you have discovered an edge that allows you to catch strong, powerful reversal. In that case, you can utilize it to your advantage and trade exponential delivery move. With that said, we're going to go over the exact way to set up your standard deviation projection, which levels do I utilize, and how to slot your target for continuation as well as reversal. So with that said, stay tuned. This can be a very insightful video. So pay close attention to this because it took me years to figure these things out. Let's get into it. Let's go over the different standard deviation level that I utilize. Now, I utilize standard deviation -1, -1.5, -2.5, -3, and -4. And I use sometime, I would say maybe 3, 3.5, sometime even 5 or 6. Those are also some levels that I sometimes utilize, but the very safe main level that you really want to focus on is going to be, I would probably say between 2.5 and 4, okay? Now, when you are on the chart, right, it's very important that you go to your tool section under, you see your logo of your account here on TradingView, and you will have your time frame here on this side. Ignore all that and go to the left side of the chart and click on this button right here, right? This looks like this. So once you click on that, the next thing that you want to do, you want to go and click on Fib Retracement Tool, or you can simply also utilize the keyboard shortcut, which is going to be Alt, all right, the button Alt and then F. At first, when you don't have all the settings that I'm describing here, your fib gonna look something like this, where only. But once you add those negative standard deviation level or projection, then it will project forward and then you'll be able to see all this different level. So the way that you want to do that is that when you double click on this tool, right? Once you double click fast, if you don't know how to double click, I don't know what to tell you. Like, okay. And then once you double click on this, you're going to get this to pop up, right? So once you get that to pop up, you want to go ahead and just select any inputs selection in here. And then you're going to go ahead and input each of these level that you see here, right? You're going to just pick one random. Make sure do not touch these two right here. These two, 1 and this right here, 0, are going to be what we call your anchor. Okay. An anchor is essentially the true level that you need to select the high and the low of the zone that you're going to try to project with your negative standard deviation level. So let's say, for example, you're trading off, I don't know, a market structure shift reversal, right? The high that you're waiting for it to break is at this level, right? This is a high that you're waiting for price to break. Let's say that level is here, and then the low of your breaker or market structure shift is right here. So your anchor, when you project it, right, you're going to need to first put it on where? 1. And then you're going to project it. So this right here, wherever you place the click and then maintain the fib tool is going to be 1. Right? And then you're going to simply hold it and then anchor it to wherever you want it to stop, right? So if I'm trying to see how far this market structure shift right here can move up or expand up to, I'll select the standard deviation level from my anchor 1, and then 0 anchor will be right here, right? So 0 level will be right here. And then when you project it and then it pushes higher and higher, you will have -1 right here. You will have -2 right here. You will have -3, and then so on and so on and so forth, right? So these two represent your anchor. So you should not be deleting these or modifying these, right, on your chart, on your settings. So keep these intact, don't touch it. On the other hand, feel free to modify randomly. You can modify this random right here, any random tool option here. Just modify them and then add these settings right here. And to keep it clean, if you see additional settings that are not supposed to be here, simply delete it or turn them off by clicking this button right here. If you click it, it's going to turn off and then not show on your projection levels. Now, you may be asking, what will happen if I add a positive level? I don't necessarily add a negative in front of it. Well, it will project downward opposite to your anchor, right? Because if you're anchoring from 1 to 0, then you're projecting negative, right? You're projecting negatively. If you're anchoring from 0 to 1, then you're projecting positively. Technically, you could do either way. It depends on how you anchor your tool, right? If you're anchoring your tool from 1 to 0, then you're projecting negatively, then you're projecting negative standard deviations. Next up, we're going to go over what are going to be the best standard deviation projection level. In my personal opinion, if you have a model that you're trading, right? Maybe you identify a range of some sort, and that range you pull back, and then you trade, I don't know, some type of inversion, right? Or maybe you're trading RL to ERL, right? RL to an ERL of some sort, ICT model, whatever that may be. The PD array that you're trading off of here, or the zone that you're trading at, you could be like a fair value gap, right? But the candle that has that fair value gap, for example, you could anchor from the low of that candle that has the gap to the high of the candle that has that gap. So you can anchor from 1 here, and you can anchor 0 here and project your standard deviation. 1.5 would typically be a safe level if it ends up being past your ERL. If that 1.5 is inside of your range, I would typically look for the first standard deviation level that project and that's right outside of your range. That would be typically what will look safe. But for the most part, if you are projecting standard deviation and then you have a relatively small range, standard deviation 1.5 would be a very safe level to target if you're trading some sort of continuation of a range. It's from inside of a range to outside of the range as a day trading type model, right? But if you're swing trading or you're trading day trading slash borderline swing trading where your trade may take 3 to 5, 7 hours, this may not necessarily be as powerful or as useful, but it definitely would serve you to have a really good anchor level. Standard deviation 1.0 is also a really good level. I would say for this, if you're trading continuation, your CISD, like it takes time for your entry to essentially unfold. That could be a very safe level to simply test and see how price react once you get to that level. So if you go over your trade and you analyze, you see consistently 1.5 react, then you know that's a level where maybe most of your profit you need to take out. And it could also be like if you have a large entry zone, one standard deviation might be very good. And these are the ways that you can utilize standard deviation, where you have very safe, right, objective level to target. You're not subjectively picking some random like key level or liquidity level that you have subjectively or discretionarily defined. You can simply stick to this deviation level. That's the importance of it. When you have levels like this, you can reiterate much faster because you're going to see pattern, you're going to see things that repeats, right? Because if you take a same trade, I promise you, if you measure standard deviation, you're going to start seeing a specific level where it reacts off of and then before reversing. That could be another tool that you can utilize, backtest and test to see, okay, does this really works really well and anchor with some of my system? And then does it allow me to improve the data that I have? So with that said, let's go ahead and talk about the next one, which is going to be volume order block. One of my favorite ones. These are going to be reversal type entry. So volume order block is a clear-cut reversal. So imagine if you had a bearish bullish candle. So we're going to go ahead and plot a bearish candle next to this bullish candle right here. And imagine if we begin reversing at first, we push up. So this right here is a qualified swing low, right? But later on, price just drop here and then would essentially sweep this level. So if you sweep this level, this zone right here could become a volume order block if the candle that confirmed this swing is a volume candle. So I will plot my level of this bearish candle because this bearish candle right here will be the order block, right? Sorry for my drawing. It's a horrible. I'm sorry about that. So this bearish candle right here will be your order block, right? The last bearish candle before this reversal move that you see here will be the order block. So where I will plot it would be simple. It will be 1 here, the low of the order block, and then 0 right here for my anchor. And then it will project forward all my levels, right? So off a qualified swing high, qualified swing low as well, this is how you can plot it. So you have bearish, bearish, and then bullish, bullish, and then you correct right here, right? Once you correct right here, this last bearish candle before this bullish correction that we have here will be your order block, your bullish order block. So a lot of the time, if you sweep this and you reverse, you could have a strong volume order block reversal here where this guy, is swept here, liquidity was taken, and then we begin reversing. But if you want to see how far price can reverse, if you know that to be a strong reversal, a strong order block to trade expansion away from, then this will be how you would do it. Okay, ABRK, I think I briefly talked about that earlier. So if you have a market structure shift, we dipped out here, sweep these lows right here, and then sweep them reverse up here and close here. Your anchor would simply be the low of that reversal and then the confirmation line, the line that confirms the breaker. Because if you once you break above this level, then it confirms your unicorn breaker. This will be 1 and this will be 0. And everything that project forward will be simply negative projection level that I described earlier. So these are how you project it, right? Depending on your PDA ring, whatever you utilize to enter off of, whether that's another block from a swing low or some type of proportion order block, I don't know, whatever you guys decide to utilize, this is how you would utilize it. On market structure shift, what I tend to realize is that 1.5 or 1, just as we talked about the fair value gap entry, would be the best standard deviation level to target. If you're utilizing, like I say, order block, depending on how you're utilizing it and where you're trading it, if it's a high probability order block, 4 standard deviation could be a very good target. Or if you want to be very safe, 1.5 would be the ideal level to have the target. With that said, that is all for today's video. If you'd like me to go over this and do more breakdown in regards to how to utilize this, show you guys more scenario, let me know in the comment section down below and I'll make sure to do that. I did not want to make this video too long, so I wanted to make sure that I give you guys all the information that you guys need to essentially plot this on your chart, plot this on your settings, and then how to utilize it depending on your entry type, right? Depending if you're entering off of a market structure shift, which would be what I call my arcane breaker. If you're entering off a fair value gap for continuation, that will be also 1.5 or 1.0. Or you're entering off an order block, which for me, I focus on my volume order block, which will be 4.0 if you're catching a strong reversal, or still stick to the safe level, which will be 1.5 or 1.0 if it's a large entry zone. With that said, I think that is all for today. If you find this insightful, learn a lot from this, let me know in the comment section down below, or if you'd like me to make more videos like this, breaking down in-depth concept that I utilize and think that can help you further and enhance and hopefully find a way to develop your edge and scale it as time goes by. So if you enjoy this type of content, let me know and I'll keep making this for you. I'll see you guys in the next video, and until next time, stay in profit. Peace.